Assalamu alaikum and good day to everyone. Let's just start FM Financial Management Resit Batch Orientation for June 2024. Okay. What exactly we offer in financial management, I'll come to this later on. Let us first discuss this question. This question came in December 2021. The topic is lease or borrow to buy decision. Lease or borrow to buy decision. Basically, in lease or borrow to buy decision, what you have to do, you have to simply calculate the NPV of borrow to buy decision and NPV of lease decision. Then obviously you are supposed to opt the source of finance which is cheaper for you. Another thing is, when you are calculating NPV of borrow to buy decision and NPV of lease decision, in both the cases, your discount rate will be same. And your discount rate will be bank loan interest rate after tax. So let's see. Evaluate means you have to make the decision whether hawker company should use leasing or borrowing as a source of finance for the new vehicle. 10 marks. Obviously, we will choose the source of finance which is cheaper. Part B, discuss two reasons other than possible after-tax cost advantage why hawker company may choose to lease rather than buy to borrow delivery vehicle. Two reasons. A very important point. Whenever your examiner asks you a question like write two reasons, two conditions, three reasons, three conditions, then while sitting in examination hall, please stick to that. Examiner has asked two reasons. If you are mentioning three or four reasons, you will not be getting any additional marks. And whoever is going to check the copy is going to just read the first two. In this class, we'll be discussing more than two. But in exam, if examiner has asked you the two reasons, so please stick to that two reasons. Discuss three advantages of using NPV rather than IRR in investment appraisal. Again, three means stick to three. In examination hall, let's read. Hawker company is about to replace its existing delivery vehicle with a new design of vehicle that offers greater fuel economy. It estimates that replacing the existing vehicle will save running cost of 2,000 per year. So they are estimating if we replace, so we'll be saving 2,000 per year. There are two financing options. Option one, the vehicle could be purchased for $34,000 using a bank loan with an after-tax cost of borrowing 4%. So same discount rate will be used in leasing option as well. Only then comparison is possible. So discount rate has to be same in case of borrow and buy compared with lease decision. Otherwise, comparison of borrow to buy NPV and lease will not be possible. So discount rate has to be same, and which is after tax cost of borrowing rate, 4%. The vehicle would have a useful life of 4 years and would have a residual value of 14,000. At the end of that period, straight line tax allowable depreciation is available on the vehicle. The vehicle would be subject to a government CO2 emission tax, which is 600 at the end of each year of operation. Emission tax expense are corporation tax deductible. Means because of this CO2 emission, the expense which you are going to bear, which is 600 every year, it will result in tax saving. Okay. Now, option two. The vehicle could be leased for a 4-year for a payment of $6,000 per year, payable at the start of each year. The lessor will pay the CO2 emission The lessor is the entity which provides you the asset. Lease payments are a corporation tax deductible expense. We know that lease payment they results in tax saving. Hawker company after tax weighted average cost of capital is 8%. This is irrelevant because we have already decided that cost of capital will be same for borrow and buy decision and lease decision. Otherwise, comparison is not possible. And what should be the discount rate? It has to be bank loan interest rate after tax. It pays corporation tax at a rate of 20% year in arrears. So there is a delay of 1 year. So simply let us first calculate NPV of borrow and buy. Then we'll be simply calculating the NPV of option 2, that is lease decision. And we will opt the source of finance which is cheaper for this organization. Part A. Borrow and NPV. NPV of option 1. The life is 4 years, but impact will go till 5 because tax is paid with a delay of 1 year. Your initial investment is 34,000. That is outlay. CO2 expense which you have to bear, that is 600 every year. That is 600 every year. And this, due to this CO2 tax, you are going to save the tax. So tax saving. At the rate 20%. Tax saving will arise from second year because tax is paid with a delay of 1 year. If we take 20% of 600, it is 120. Now let's simply take tax saving from capital losses. Tax saving from tax appreciation. Let's see what is the method of tax appreciation. A straight line. See, the investment amount is 34,000. Residual value is 14 divided by 4. Obviously, 34 minus 14 gives us 20. Divided by 4, it is 5,000. So logically, the tax depreciation every year, it is 5,000. Multiply by 20%. Gives you the tax saving of 1,000. And this tax saving will arise from the second year because tax is paid with a delay of 1 year. So tax saving from tax depreciation, 34,000 minus the residual value divided by 4 into 20%. I'm getting 1,000 each year. Now simply take the residual value. Which is 14,000. Obviously, we know that when we solve this question on a spreadsheet, which is obviously option available, by using the shortcut, you can calculate NPV. Net cash flows. 34,000 minus 600. We have minus 600 plus 120 plus 1,000. 520. 520. Now in this 520, we'll add 14,000, gives us 14,520. In the last year, we are having a saving of 120 and 1,000. It means 1120. Discount factor is 4%, which means that this is 1. Just a minute. This is 0.9615. And let me repeat again. Obviously, when we solve this question on Excel on a spreadsheet, then we use the shortcut of calculating NPV. 0.9245. 0.889. 0.854. 0.82822. Present value of net cash flows. 34,602.9615. 577 negative. 520 into 0.9245. With a rounding of little bit, 481. 520 into 0.889. 462. 14,520 into 0.854. 12,400. 1120 into 0.822. 921, you can take it. So minus 34,000 minus 577 plus 481 plus 462 plus 12,400 plus 921. We are getting negative 20,313. Obviously, when you will be solving the same question on a spreadsheet on Excel, so your answer is going to be a little bit different, which is absolutely acceptable. No issue at all. Now let's calculate NPV of lease this year. Option 2, that is leasing. And when it comes to NPV of the lease decision, the vehicle could be leased for a period of 4 years for a payment of 6,000 per year payable at the start of each year. Since it is payable at the start of each year, it means you are paying rental in advance. If you're paying rental in advance, your time will start from 0. But still it will go till T5. Why? Because tax is paid with a delay of 1 year. Lease rental, 6,000 each year. There will be total 4 rental payments. Tax saving at the rate of 20%. Your tax saving will start from the second year. 6,000 into this 12. Simply your first tax payment will arise from the second year, so the saving will also arise from the second year. Nothing else. Simply get calculated the net cash flows. $4,800, 4,800, 1,200 and discount factor is 4%, and we have already calculated the factors. 0.9615. 0.9245. 0.889. 0.854. 0.822. Present value of net cash flows 6,000. 6,000 to 0.9615. I'm getting negative 5,769. 4,800 to 0.9245. 4,800 to 0.9245. 4438. 4,800 to 0.889. 4267. 1,200 to 0.854. 1025. 1,200 to 0.822. 986. Here comes the NPV. Minus 6,000 minus 5,769 minus 4,438 minus 4,267 plus 1,025 plus 986. I'm getting 18,463 negative. Obviously, we have to compare NPV of the lease decision with the NPV of borrow and buy, and it can be clearly seen that NPV of lease is lower than NPV of borrow. So company should lease the new vehicle because it has a lower present value cost. So Hawker company should lease the new vehicle because it has the lower present value cost. Okay. Now in part B, they're asking, give us two reasons. Simply why Hawker company may choose to lease rather than buy the new vehicle. What are the two reasons? See, one of them could be, what if borrowing option is not available? There's a possibility that you are unable to get the borrowing. So as we discussed, two reasons why Hawker may choose to lease. So one possible reason is, what if borrowing option is not available? Let's say Hawker company is not able to raise the loan. So then they have no choice just to go towards lease. So that is possible. it is possible that Hawker Company might having difficulties might have difficulties in obtaining a bank loan. So it is possible the Hooker company might have difficulties in obtaining a bank loan. So obviously, if you're not getting bank loan, then lease is the only option. So in that case, in this case, lease is the only option. Another possible reason is see, when you borrow and buy, so obviously when we borrow and buy while calculating NPV, we consider residual value. The scrap value is 14,000, but obviously when you borrow and buy, then you also face the risk that there is a possibility residual value will not be 14,000. It could be far more, even lower than, I'm talking about the risk. So the risk is the residual value could be, there's a possibility it could be far more lower than 14,000. So if you don't want to face the risk of fall in the residual value, so then obviously instead of borrow and buy, you can go for lease. So let's say Hawker company does not want to face risk of fall in the residual value. Under lease option, what happens? Logically, this risk is actually transferred to the lessor. So Hawker company does not want to face the risk of fall in the residual value. The value is 14,000. If you want, you can write residual value of 14,000. So under lease, what happens? This risk is transferred to the lessee. In the lease arrangement, this risk, under lease arrangement, risk of fall in residual value is transferred to the lessor. Lessor is the company which provides you the asset. So these are the two possible reasons. There could be another possible reason also, but there's no need to write an exam. If right now you can write it, it's up to you. The lease gives you the more flexibility. That is, there's a possibility that in the lease agreement, there might be a break clause, which allows the lessee, if lessee wants to, let's say, end the lease agreement even before the 4-year period, and that would be possible. The benefit is, since let's say after 1 or 2 years, if the technology changes and this asset becomes obsolete, so under lease arrangement, it is possible that lessee ends the lease agreement and goes for a new asset. But obviously, this flexibility is not available in case of borrow and buy the same. Now let's go for part C. Discuss 3 advantages of using NPV rather than IRR. Very simple. All you need is just write the limitations of IRR. That will be your answer. We need to write advantages of NPV over IRR. So what are the advantages of NPV over IRR? See, in case of the first advantage, we have already discussed these advantages in our regular classes. In case of mutually exclusive projects, IRR can result in an incorrect decision. So that is why in case of instead of IRR, we use NPV. In case of mutually exclusive projects, IRR should not be used. Because it can result in incorrect decision. It can result in incorrect decision. It can result in an incorrect decision. Instead of IRR, project with a higher NPV will be accepted. Project with a higher NPV will be accepted. Another problem is if there are non-conventional cash flows. In case of non-conventional cash flows, for the same project, we have multiple IRRs. So obviously, if we have multiple IRRs, then the problem is it will be very difficult for us that which IRR should we consider for comparing with the cost of capital. So in case of non-conventional cash flows, there will be multiple IRRs, which obviously makes very difficult to make the decision. Decision making becomes very complicated, very difficult. But NPV does not have such problem. So in case of non-conventional cash flows, non-conventional means, if I just give you the idea, for example, there is outflow, inflow, inflow, let's say again outflow, inflow, outflow, inflow, outflow, outflow, inflow. If this is happening, these are the non-conventional cash flows. Conventional cash flow means you will be having one outflow, series of inflow, and there's a possibility at the end of the project you might be having a one outflow of tax payment as well. Still, it is considered as a conventional cash flow. But the non-conventional, I've just given you the example. So in case of non-conventional cash flows, same project will have multiple IRRs. Comma, NPV does not have such a problem. NPV does not have such a problem at all. Okay. What else? See, what if cost of capital changes from year to year? If cost of capital changes from year to year, then obviously calculation of IRR becomes difficult. It becomes complicated. And let's say somehow if you have managed to calculate IRR, then another difficulty is how to accept or reject the project, because whatever IRR you have calculated, you will have difficulty to know which cost of capital to compare with, because you don't have one cost of capital, you are having multiple costs of capital. So simply NPV can be used in a situation, in situations, let's say, where cost of capital changes from year to year. Okay. We also can calculate IRR, but it will be difficult for us on the basis of IRR either to accept, how to make a decision regarding should we accept the project or reject the project. You can say that although IRR can be calculated, but it will be difficult to know which cost of capital to compare it with. So it is difficult to know which cost of capital to compare it, because cost of capital is changing every year. Now listen, if I give you a little idea exactly what we offer in our financial management, this was just one question I just wanted to discuss with you. Actually, entire FM just within 60 lectures. Each lecture, I would say that each lecture is just on average. The average falls somewhere, I can say 40 minutes, even it from 45 minutes we have come down this, and it is just on each lecture is just on average just 45 minutes long. Second, weekly live revision classes. Third, you will also get homeworks. You can say assignments. Four, we have offered now in this, from this session onwards, we'll be conducting a grand live revision class also, inshallah. You will get a crash course, FM crash also. Just, I would say, within 10 hours, you can revise the entire FM. So in this crash course, within 10 hours, you can revise the entire FM. 6, near to the exam, there will be a mock also. So main thing is, actually, you're not supposed to spend so much time to prepare yourself for financial management, because if we are covering the entire FM in 60 lectures, where each lecture is just 40 minutes long, so obviously you're not spending so much time. And weekly live revision classes, they give you the opportunity Okay, I'll give the number for the enrollment, no issue at all. And grand live revision class will definitely help you to, revise the entire FM in a very short period of time. And for admission and other queries, I'm giving the admin number, ASA admin number. If you're outside Pakistan, 0092 333 666 214. Those they are within Pakistan, this is the number. Simply you can connect my admin, and my admin will automatically going to connect you with me. Don't worry at all. So you can ask my admin, they will share my number with you. So students, thank you very much watching this lecture. Have a nice life and hope to see you all in my course very soon. Thanks a lot.